And the audio's better now. The audio different now. And the audio's better now. Yeah, I can hear. I can hear it much better on my phone. So that's good. That's working. I'm gonna have to audio different delete now. That first live. And the audio's better now. Yeah, I can hear. I can hear it much better on my phone. So that's good. That's working. So it's my fault right there. I'm gonna have to for the bad audio. Audio is different now. Delete that first live. Now it's clear. All right. And the audio's better now. Yeah, I can hear. I can hear it much better on my phone. So that's good. That's working. So I got this EBITDA fault right there. Column now that we were missing for bridge audio. Audio is different now. That first live. Now it's clear. And what I would prefer to do is I want to find and the audio is better now. Yeah, I can hear. I can hear it much better. I want to find the average. That's good. That's working. So I got this EBITDA fault right there. Column now that we were missing for bridge audio. Audio is different now. That first live. Now it's clear. And what I would prefer to do is I want to find and the audio is better now. Yeah, I can hear. I can hear it much better. I want to find the average. That's good. That's working. So I got this EBITDA fault right there. Column now that we were missing for bridge audio. Audio is different now. That first live. Now it's clear. And what I would prefer to do is I want to find and the audio is better now. Yeah, I can hear. I can hear it much better. I want to find the average. That's good. That's working. So I got this EBITDA fault right there. Column now that we were missing for bridge audio. Audio is different now. That first live. Now it's clear. And what I would prefer to do is I want to find and the audio is better now. Yeah, I can hear. I can hear it much better. I want to find the average. That's good. That's working. So I got this EBITDA fault right there. Column now that we were missing for bridge audio. Audio is different now. That first live. Now it's clear. And what I would prefer to do is I want to find and the audio is better now. Yeah, I can hear. I can hear it much better. I want to find the average. That's good. That's working. So I got this EBITDA fault right there. Column now that we were missing for bridge audio. Audio is different now. That first live. Now it's clear. And what I would prefer to do is I want to find and the audio is better now. Yeah. Alrighty. I am back now. Yeah, I think I'm making life trickier than it has to be on this table here. I'll just delete that for now. Um, but what I do want, I still want that data. So, oh, we can't do that in a merge cell. Well, that's kind of dumb. Um, this is why I don't like Excel. And I try to stick with Python whenever I can. So yeah, I'm gonna go back and I'm gonna have to delete all these name titles here because I don't want the name titles. I just want the tickers. That way we can loop through. If there is like a Python, if there's like a Python library that already has like the company's sector or industry already included. I think I used to use, I think it was like Yahoo Query, but then I think Yahoo changed the layout of the HTML on their website and then it doesn't work anymore. Something like that. At least I've had issues with that library. I don't know what's going on. Luckily, Yahoo Finance, Y Finance still works. I've been liking that one. Wait, we're gonna do that the long way. We're gonna delete that. Okay, great. Okay, so this is what I originally did not have. I didn't have the EBITDA EBITDA column on there, which is what I needed to run my Python script. And this one does not have a value, so I'm not sure what we should replace it with, but I guess we'll replace it with a null, and we'll just replace all of them. So, and then we could say we could create a flag column here and just say if the average and I want that to stay So let's calculate the average EBITDA of this basket of aerospace stocks. And then we'll say, maybe we want it to be like greater than. Do we want it to be greater than the average? No, because we're looking for the low ones. So if it's less than, no, I'm an idiot. We want greater than because this is flipped. So if the average is greater than the stock itself, then that means the stock is low. We'll say yes. So no, that. So just out of curiosity, what is the average of the basket of stocks? So it's 31. The average is 31. So for the defense aerospace sector, the average EBITDA of this basket of stocks is 31. We can see RTX has a relatively lower EBITDA. So from a value perspective, maybe the stock is cheap, maybe it's not. Who knows? See, like, this is where it gets interesting. Like, why is Axon? I don't even know what that is. It's like a 304. That's crazy high. I don't even know what the I don't even know what that stock is. Got 4 viewers. Welcome to the live stream. Um, we're just doing some stock research, looking at stocks. If you have any requests, I'd be happy to look at some stocks with you guys. X on. See, I don't even know what half of these companies are. Okay, so it's like for it's like a security company. They make tasers. Okay. Wow. VR training. Whoa. It's interesting. Dude, how about that? Instead of like Oculus, just buy an Axon VR training headset. Don't buy a don't buy Meta Oculus. Okay. So it's like security. Security products. So that's what sucks about the industry types, right? Because like yeah, this is technically electronic technology, but you got Axon with BA, and what did we select? We selected aerospace and defense. So, yeah, I mean, yeah, it is defense, but you got stocks next to each other with Boeing. So it's like, is that really the best fit? But we'll work with it, obviously. But yeah, this data table looks pretty good. So now we got low EBITDA. We got that on there, and we should be able to go now. So I'm going to save that, and we're going to get back into our data frame in Python. We're going to reload this, and now we have EBITDA and EBITDA flag, whether or not it's low compared to the average. So then we can run through a loop, hopefully. Low EBITDA, it doesn't like that column name. Why not? EBITDA. Seems to not like Oh, I see. Because there's like an underscore. Yeah. Okay. So I need an underscore there. Underscore there. Any other instances of? I think that's good. All right. Okay, sweet. So now you're getting loops of, so like RTX, this EBITDA EBITDA, like we mentioned, the basket of stocks is at 33, but RTX has an EBITDA EBITDA of 18. So this could be like a starting point of, hey, if the stock's trading at 18 when the basket's at 31, is it justified that it's cheaper? Is RTX facing issues in the company, or is the stock trading at a discount? But we could see that the cash flow has 3x'd, went from 2 billion all the way to near 7 billion span of 3 years. So it's really good growth. And the EBITDA EBITDA is relatively low. Got Honeywell. The EBITDA EBITDA on that's relatively low. Free cash flow has been kind of flat-lined. It's gone down in recent years, picked back up. And then we know Boeing. Boeing's had a whole can of worms there. Yeah, so this Python script pulls the data for the free cash flow of each company that's in our ticker spreadsheet. And it gives us a quick snapshot of, ooh, look at that, free cash flow. Dang. How did it, dang, it grows so fast. What even is TDG? TDG. What even is that one? Electron, transdigm? Am I even pronouncing that? I don't think I'm even pronouncing that right. I'm assuming the stock has gone up a lot with the free cash flow growth. Stay loyal to free cash flow. There you go. Oh yeah. Yeah, that's nice growth right there. And if you bought that in COVID, you would went from 300 to 1,200. That's pretty good. I'm going to be envious of 276% returns. That's great. But even still, even after that huge growth, from a basket perspective, the EBITDA is low, even after that stellar growth. So makes you wonder what's up with that. And then you got Axcon. That one had stellar growth, clearly. Axon, Enterprise. See, that's crazy. What? Okay, it'll be added to the NASDAQ 100. Well, too bad I didn't notice this stock beforehand. See, this one's interesting, though. You got two volume gaps right there. You got a volume gap there. You got a volume gap there. Assuming that they need to get filled sooner or later, the stock might want to come back down a bit, live out its glory days, and then come back down. That is a lot of growth. Yeah, this one might be interesting. That might be like a short-term put position or something. Just banking off the idea of, you know, mean reversion. I mean, yeah, historically it's been hovering around this region and then you get this huge spike to the upside. But of course, you know, it might be valid. Might be valid. This is where I gotta go to like ticker terminal and pull up the fundamentals. But anyway, so we get all these free cash flow figures. I use this kind of like as a screener just to check out what type of stocks are doing pretty good with their fundamentals. We check out what the average price to free cash flow is, which is 146.9. And then we could create a new flag for the price to free cash flow. So let's create that now. So now we have quarterly free cash flow, 1.8 billion, yearly free cash flow of 7.2 billion. And is the free cash flow less than the basket of stocks? And for RTX, it's yes. So from a EBITDA standpoint and a price to free cash flow standpoint, this stock trades cheaper relative to its peers. So then we would have to answer like, is it for good reason that RTX is lower? Is it unjustified that it's trading lower? So we can call this defense space stocks analysis, and we'll successfully save that. And then I can open up the new table that we have. Okay. So then um, we can say, hey, I only want to look at the cheap stocks. So low EBITDA, so I'm going to say yes. And then low price to free cash flow, I'm going to say yes. I only want to look at the cheap stocks. And convert to number. Isn't there like a faster way to convert? Yeah, there you go. Just convert to number. There you go. That's better. Convert to number. Dang, I would. Oof. Hate to own that stock. Okay, yeah, we got Joby in there too, but they're negative free cash flow, so obviously the price of free cash flow is going to be lower than the it's going to be lower than the average. So we might want to let go of those stocks too, because if they're not generating free cash flow positive, they're probably either too young of a company or they're low quality company. So what I can say, what we could do is yearly free cash flow positive. And then I'll just say if this is greater than 0, then yes, else no. Okay. And then we got new values that way. I'm going to refilter. I'm going to say yes, yes, and finally yes. Okay, cool. So now we have a basket of stocks that we can potentially do some further analysis on. EBITDA and price free cash flow is cheap relative to the basket. And then we can see whether or not being cheap is justified. So I'm going to move this out of the way. I have RTX. All right. So looks like in the past I've looked at this stock before actually. Because I clearly got some drawing on there. Yeah, so we saw some stellar growth past couple months. Got some good analyst coverage on it. So this is where I need to go to TIKR terminal. Yeah, here we go. So now we're in TIKR terminal. Let's go to RTX. Let's see what we got here. This is annually. I'm gonna toggle over to quarterly. They're from 2023. It's gone up really great. It's gone up a lot, actually. But again, like the entire market's gone up a lot, actually. So what am I to say? We could see some type of EMA bounce, maybe. That's what I would be interested in seeing, actually. So total revenues are slowly, kind of flatlined. Went from 19, uh, so 19 billion, 20 billion. It looks kind of flatlined here. They've done way better than previous September quarter, so that's pretty good news. Gross profits going up 4 billion. So they're making good money. And net income's been pretty strong as well, hovering basically at the 1.4 billion mark. See, I also like to map I think it's in here though. Hmm. There it is. There's the market cap. So, like, we can compare and say the market cap back in 2022 when revenue was at 18 billion. It's pretty comparable to where it is now because now we're seeing market cap at 160. So it's it's another 12 it's another 12,000, and it can be justified. They're making 2 billion more in revenue, so it could be justified. But it's pretty comparable to where they were back then. So the stock might be behaving just as well as it should. They have grown their cash overall from 6 billion, 6.6 billion. So they are growing that. Long term debt, it's also on the rise a bit. They paid it some down though from December 2023. They paid some of it off, but still total current liabilities. And not a lot of cash on hand. Unless they're doing, a lot in free cash flow, they're going to have to be borrowing that money. Where's my free cash flow at? There it is. Then you got market cap. So here we're seeing them perform only 2 billion in free cash flow, but 2 years ago they were performing nearly 4 billion in free cash flow and the market cap was only 148. Now we're at 160. And yeah, looking at 2023, that would have been beginning of 2024, that would have been a great time to buy, clearly. You had a company making 4 billion in free cash flow and the market cap was, 40,000 less relative to what it was in 2022 and it was making just as much. But yeah, even with the lower price to free cash flow, it's starting to look a bit frothy, especially when you compare it back to 2022. 4 billion free cash flow. Now we're at half that, 2 billion free cash flow, but the market cap is higher. That must that might mean the market's pricing in some future prospect for the company. Yeah, I'm not really feeling any interest in that stock. I don't know. Nothing really stands out for me in that one. See, sometimes you got to get to like the obscure stocks. I mean, like, yeah, look at this one. EV to EBITDA of 8.5, and yearly they've made, 1.8 million. I wonder what the free cash flow is on that. Did I write that down? Price to free cash flow. 82. 82 on that one. CVU. Never heard of it. CPI Aerostructures. Yeah, that stock has been tumbling. Let's go to the quarterly chart. Sometimes, man, you want the obscure ones, the one that no one talks about. Okay. Let's see what CVU got. Impress me, please. Sucks when you do all this analysis and it's like, I can't find a stock I want to buy. That's when it's not fun. So you had a company making 24 million in revenue 2 years ago. Market cap was at 39 million. Now we're at 44 million and we're making less in revenue. And it's obviously not, that easy. Like it's not just black and white. They are going through their cash though. Went from 4 million in cash, now we're at 1.7 million. It's got a lot of total current liabilities. Got some long-term debt on their books. Unless they're going to keep making free cash flow, you have to borrow that money. I'm going to keep market cap. What's the free cash flow looking like? Kind of flatlined, huh? Market cap pretty flatlined, but now we're seeing better free cash flow. Had a dip in 2024, but that looks to be. No, I was gonna say there might have been some seasonality in that, but might not be. I don't know. Not really feeling that one either. Which one looks good? Tell me what we order. Price to free cash flow of 11? No, EBITDA of 11. 60. See, price to free cash flow of 15. want to look at that one. 15 price to free cash flow. Now I gotta look at that. Look at the chart first. What we got? Pretty flat company. Past 2 years. What is up with that? Downward facing trend line. Welcome to the stream. We gotta look up what this thing is. Allegiant Technology. Headquartered California. Instrument software services, consumables for laboratories. Spinoff from HP. So this is for like medical. This is more medical stuff. Interesting. See, yeah, the sectors are not the best. Why is this grouped with Boeing? All right, let's see what we got here. Total revenues look pretty flat. And the market cap has been flat past couple years. Total cash investment. Total current. Not the worst ratio I've seen, but could be worse. Could be worse. Um, Pretty flat book value. Okay. So yeah, this is where it's interesting. Got 220 million in free cash flow. The market cap was at 44 billion. And now we're at a free cash flow of 388 million. Market cap's only at 37 billion. Why might that be? Even back when market cap was free cash flow was 481 million, the market cap was still deteriorating. So far, I feel like this is the most interesting stock we've seen tonight. It's got a really low price to free cash flow at 15, 1.4 billion in yearly cash flow, 360 million previous quarter free cash flow. And in that basket of stocks, they are trading at the lowest price to free cash flow. So I'd say that one's pretty interesting. That one would have to keep on the radar. I'd have to research more about it. Anyway, hopefully you guys thought this was interesting or informative. Um, Definitely interested in Agilent Technologies here. Pretty good price to free cash flow and revenue stagnant, but clearly it's strong. But maybe this will inspire you guys on maybe how to screen stocks or filter down on stocks, decrease the search space so that you could go into more of the heavy lifting in the financials. Um, we can use EBITDA and price to free cash flow compared against the industry average, and then filter down on the stocks that are trading at a lower multiple, and then that'll consolidate your list. Um, if you guys are interested in more live streams, let me know. It might be interesting to see what the back end of the research looks like and maybe uh, what websites I use, um, what research I do. Talking of which, why don't we go into Trendiest terminal and look up a stock? Let's see what that looks like. So the performance is lagging the stock itself, down 18%. So there might not be validity in these buy and sell signals, might not be a good fit. But buy signal is pretty good recently. November 22nd, stock's up pretty good. Signal came at 133. Now the stock price is at 139. But the stock has been consolidated heavily around the 140 line. Interested if there's going to be like a breakout or something for that. But yeah, out of the stocks we've seen, this one might have an interesting valuation to it. But hopefully you enjoyed this live stream, being able to see the back end of some of the metrics and tools I use. And let me know if you're interested in more live streams as well. Um, Curious to hear your input, curious to hear what stocks you guys are interested in. And I think it could be fun to analyze stocks live, hear some feedback from you guys, see what I could do better, see what stocks you guys are interested in real time. I think that'd be cool. But besides that, um, I'll catch you guys in the next one. Have a good night.